Rohr here with an early global view on Tuesday, August 4th, 2015. It is currently 7 a.m. U.S. Central Time, and quite a bit going on the macro front, including a significant rally out of Chinese equities and some weaker than expected data Monday that put some pressure on equities and helped the govies. And we'll be getting back to all of that shortly. So, what does all this mean to the markets? Well, for right now, it means that after rebounding late yesterday up to the 2090 area, in other words, after slipping below 2096, this not surprisingly went down to test 2090 to 88 and even slipped below it, but it rebounded to 2090, and this morning we're right back down $3, right at about the 2088 level. So it's going to be a pretty important day on how the U.S. responds to the data. And also what we have is the next bigger lower support is back in the 2078 to 75 range. So even though this held, pardon me, right at 2080 yesterday, the zone to watch is 2078 to 75, much below which the market is actually in a whole lower important range, and we'll be looking at that shortly. And whether the market can recover early today is also important from the standpoint of whether the hourly MACD can get back above this lower runaway band. If it cannot, if the market's under pressure early, it would speak of weakness that can feed on itself. Bigger lower supports are, of course, back at 2060 to 56, which we saw on the retest going back to the early part of last week before the market anticipated the friendly influence of the Fed going into Wednesday, and higher resistances, if it should ever get back above 2100 to 2096 again, on recent form is right up at 2108. It's interesting that the down break out of this channel would have occurred right at what was the top of the rally from Friday, and the bigger resistances remain up at 2119 to 25 range, which we saw at the top of the week a couple weeks ago. And that pretty much does it for the short-term view of the S&P 500.